morning, everyone, and welcome to Marketing Matters. I'm Sarah Touchstone, Landmark Title's social media marketing strategist and educator. And I get the pleasure of bringing you all Marketing Matters live every Wednesday morning at 10 a.m. Arizona time. It is February and home buying, it's heating up. This is definitely the time of year that we tell a lot of sellers hold off, wait till after the beginning of the year. And man, it is starting to get hot, and not just our temperature wise, which is also hot here in Arizona, but our housing market is getting heated up. So we are focusing all the month of February on home buyers. How can you help to prepare your home buyers so that they are going to win any type of property they are out there desiring? Today, we are kicking off the month with the debt to income ratio and why debt to income matters when your clients are applying for a loan. We have the wonderful, the amazing, the most talented Stacy Gross on today to break this down for us. Welcome back, Stacy. I'm so excited to have you on. This topic, like I was saying, is of a particular interest for me because I know what debt to income ratio is, but I personally am not exactly sure how to even calculate my own if I wanted to buy another home. So I'm really excited to kick off the month with Stacy and with our topic on debt to income ratio. Stacy, welcome.
Hi, good morning, everyone. Thank you for having me. It's always an honor and a pleasure to be able to share, industry information. So thank you. So what I thought with debt to income, let's break it down into a couple of different sections because you've got the debt and the income, and the calculations are different. But this is really going to be the foundation for determining what somebody qualifies for, right? Because I always tell people, lenders are going to figure out what loan amount you qualify for, and also which program options you're going to have available. So let's talk first about income. So income comes in a lot of different forms. We have seen so many changes with income, especially with gig workers. Employers have gotten very creative with how they pay their employees. And so doing a really thorough job on the front end in regards to what their income looks like could entail pay stubs, getting pay stubs, year-end pay stubs, W-2s, tax returns if needed. And by looking at their income, are they hourly? Are they salaried? Is there variable income in there, i.e. commission or bonus income? What can we use for qualifying income? And do we have two things? Do we have a history, right, of that income? And especially if it's like a second job, but also do we have the expectation that it's going to continue? Now, anybody could lose their job tomorrow. We know that. But if we're looking at an income, we want to see that we're typically looking at a 2-year history. There are exceptions. Let's say somebody's coming out of college and now has that diploma and they've got a job related to what they studied in college, or however that looks. That is taken in as a compensating factor, of course. But again, we're looking for where we've got stability in income. So once we've calculated and determined our income, we include that in our application, obviously. The next portion now is digging into debts. Debts and calculating debt has also had a big impact on qualifying because you've got your revolving debt, right? You've got your minimum payments on credit cards. A lot of times buyers will say, "Oh, I've got a $500 credit card bill." We're taking the minimum payment. We're not taking the entire $500 and using that in the calculation. So we're looking at a month in time, right? So I'm calculating my income based on the month of January, right? And using it, and if I have to, I can average it out over 2 years. So I've got my income. Now I'm taking the minimum payments for revolving debt. Do they have an installment debt? Maybe they have a car loan. I'm looking at those two items for also to ensure, do I have the correct numbers? Maybe they co-signed for a loan for somebody else. That's included, except with one caveat. If the other party on the loan has been making 12 consecutive payments, then I don't have to include that car payment or that installment debt. but it has to be 12 consecutive payments and it has to be out of their bank account. It can't be out of a shared bank account. That's usually what trips up, especially for parents that co-sign on a car loan for their child. In that situation, we would have to include that entire car payment also. And that can sometimes flip the switch on a lot of things for us. So have they co-signed for anything? The other thing that is new is the pay now, pay later format. You've probably heard of it as a firm, or you go into a Target to buy something and they've got it where they can break it out into monthly installment debt, where you can break it up and pay it over the course of 3, 6, 9 months or a year. Sometimes they don't have any interest, but that's still a payment that we have to consider. It'll typically show up on a credit report. 9 times out of 10, it shows up on a credit report because they have pulled credit. So a lot of times, even if they haven't maybe purchased that item, it'll show up still in the bottom half of the credit report where it shows what inquiries they have had. So you'll hear us on occasion. Well, I'm not sure why the lender's asking me about this account. Well, we have to confirm that you don't have any new debt. Again, taking the minimum payment, including that. So now we're building, if you would, a spreadsheet of including all of these different debts that they have to use against our income. So once I have those numbers broken down, the next thing I want to look for is I want to go through the declaration page on our application. So it's typically the last page of the application, and it asks them all kinds of questions. Do you have any foreclosures or short sales? But one of the other questions is, do you have any federal debt? So student loans, something that may or may not show up on a credit report. Typically student loans do, but we're looking for that. The other thing we have to be aware of and is asked on there is, are you divorced, separated, that along those lines? Because if there's a divorce situation, we need to know, especially if it's a recent divorce. If it was a divorce from 10 years ago, that depending on how it was structured, those debts may have already gone by the wayside. But we're going to ask that question. We're going to ask about the debt, any debt still related to the divorce. So most lenders will again ask, hey, can we get a copy of the divorce decree? Because we would need to review it. And believe me, I reviewed a lot of divorce decrees over the years, and it runs the gamut what we will see in a divorce decree. And so it can open up a can of worms in some cases in regards to what we have to get for documentation, but we have to confirm, are they paying alimony or spousal maintenance? Or are they receiving that? Because again, that can be used as income, but it can also be included on the debt side. So we always want to ask for copies of the divorce. It's helpful as real estate professionals. If you know that your client has had a divorce, it is helpful if you share that information with us, because then at least we have an idea. Gosh, something we need to look for, because on occasion, people will not mark that declaration page accurately. And then we end up with an, oh my gosh, situation where we need to get that resolved as quick as possible. Okay. And I don't know, if you have any questions, throw them into the chat or the question and answer. Sarah's going to help me with those. But feel free to throw out any questions that you have. Okay. So depending on the loan type, so now once I've calculated my income and I've got my debts, my minimum payments that I'm obligated to every month, I'm going to now take a look at what can this person qualify for a home loan. And with different loan programs, you have different requirements. And I know one of your sessions this month is on credit scores and FICO. I encourage you to attend that, because that's probably the single biggest factor in a lot of times what we can do. If somebody has a really high FICO score, let's say they're over 760. Anything over 760 is considered excellent. They have an excellent credit score, and their debt to income is high. So when I say high, maybe it's between 45 and 50% debt to income, total debt to income, including their housing expense. We might be able to get that loan through the automated underwriting system, because again, they've got a great FICO score. The challenge you're going to have is if people have a high debt to income, low credit score, and all of a sudden you're trying to get them, into a house, it just may be beyond their means. So it's important for the lenders to really focus on looking at all the factors that can impact whether that loan is going to get approved or not. So, when you're talking with somebody and you have questions, and they're bringing up things, you're not expected to be the expert by any stretch of the imagination, but make sure you're sharing that with your lender that, hey, there might be a concern here. So when we're looking at different loan programs, it depends on the lender. Okay, so as I tell you this, depending on the lender, credit unions, banks, bankers, mortgage brokers, everybody will have a little bit different take on it because of what we call overlays. So if you work with a company that has a lot of overlays, and usually that I run into it mostly with credit unions, they'll have, because they're risk averse because of the membership, they will have lower thresholds. So just because somebody couldn't get approved at one institution, make sure you talk to other institutions, okay? So for example, with a VA loan, I always ask this as kind of a trick question because VA does not have a debt to income max ratio. So there's other things that are calculated with VA loans regarding residual income, obviously credit score. Also too, lenders are never going to want to put a veteran in a situation or an active duty service member in a situation where they're in over their head debt-wise. We never want to do that. But in some situations, there's extenuating circumstances. We can get, I believe it or not, we did a loan at an 89% debt to income ratio, including the housing. So there's flexibility with VA loans. That's why the VA is such a great loan for veterans and your active duty service members. So keep that in mind. FHA, typically once you are getting around 56%, you're going to run into some issues. You want to make, if they have if their FICO score is not very good, you're probably not going to get an automated underwriting approval at maximum debt to income ratio on an FHA loan. Conventional, you're safe to stay around 45% total debt to income. Sometimes you can go up to 50. I have one right now where we're at 50, but she's got an 825 credit score on her FICO. And so things we just have to, it can kind of change the scenario. So those are some just kind of quick tips and things, with regards to debt to income and why it impacts the loan so much. When you've got debt to income that's really high and somebody who's coming in with a minimum down, that can have a big impact on us, right? So it's just things that we have to watch for, that one of the biggest, I say, key elements in determining what somebody can qualify for. So how do we solve for, gosh, my debt to income's too high? So there's a couple of different ways we can solve for that. We can, on the income side, we can add a cosigner. If we want to add a cosigner, that's always an option, and that has happened. So we can add a cosigner. We can look at, do they have additional sources of revenue or income? Sometimes people will say, oh yeah, I've got this job, but I'm also getting a pension. I've had that where they've got pension income coming in, or monies from an IRA. We can use those incomes also. So there's asking kind of those second layer questions if we're having issues with debt to income. Next one is maybe it's paying off debt. I've had some where we've requested or said, hey, if you pay these items off, and we always tell people no new debt during the loan process. And you can help us with that also, real estate agents, by reminding your clients no new debt. Don't go, I know you want that new bed for the house, but hold off till after we close, because if we have to pull credit again, it'll pop up and they may have to be required to pay it off at closing. So again, if our debt to income is tight, I may be suggesting they pay off some credit cards, and we can run numbers, right? We're going to go in, or the system will allow us to check things and say if this was paid at close of escrow, let's say. Because in some cases, if somebody can get a gift from a family member, let's say, they can use that gift to pay off debt at closing. So that can help us also with bringing down that debt to income ratio so that it goes in line. So that's just you just kind of sometimes have to work with people and talk through what their scenario is. Worst case scenario, pretty obvious, is you just back down the loan amount, right? So it may be saying to somebody, hey, look, I know you want to have a higher loan amount, but based on your debt to income, what if we brought the loan amount down? What if we do a permanent buy down on the rate? Maybe the seller will work with us and get you concessions to pay down the rate. And so if we can get the rate down, that can have a positive impact also. So there's levers we can pull, for the lack of a better word. There's levers we can pull that can support that buyer getting into the home that they really want. So I hope that is more helpful. And Sarah, I don't know if we have any additional questions or if there's anything you feel like I should cover.
Stacey, I mean, you were touching on it a little bit right there at the end. Um, but what are some of the other strategies to lower my debt to income ratio before I'm applying for a mortgage?
Great question. So a lot of it is, and unfortunately, the bad news is, as a country as a whole, we are at the highest amount of consumer debt over the 40 years. So when somebody was saying is calling me and I had this call on Monday night where this gentleman was saying, look, I'm preparing because I'm probably 6 months out from buying a home. What should I be doing now? So the quickest tips I give him is no new debt, no new credit, because you're sometimes see your credit score drop by 20%, pardon me, 20 basis points just by adding a new credit card. So don't get that new credit card at Target, even though they're offering you 10%. It's not, it has such a huge impact. I call it shotgunning, where you are targeting specific debt items. Maybe you've got one where, gosh, if I paid off this $2,500 credit card that's got a minimum $100 month payment, if I paid that off, I could immediately see a better impact than if I paid off the $500 credit card that's got the $25. So a lot of times it's looking at the picture, and we like to, if the sooner we can get people in, the better, because we can give them a big, overview of what their credit looks like and what they could do to improve. Lenders also offer credit analysis. So what we will do is we will take their credit, we can do an analysis and say, here are the things that if you paid these items off, it would help improve your credit score. So that's also in play. And then also, gift sometimes can be a good idea for paying off debt or even just putting additional money down on the property. So that's another way, believe it or not, that lowering that loan amount again can help.
Awesome. Thank you. That was my big question for you. If anybody else has any questions, please feel free to put them in the chat window. And Stacey, maybe you can put your contact information in the
Sure.
chat as well. A lot of times people don't like, especially when it comes to like debt to income ratios, because it can be a personal question sometimes.
You
So
bet.
please feel free to reach out to Stacey. Stacey, I love how you always touch on the VA as well. I know for me, I've got a son that's gearing up to go into the armed forces. So every time I hear you say VA, I'm like, what? What about
Yeah.
that? Because I know nothing about that. I don't have any family that's direct family that has military experience. So the VA loans and everything, that's all new territory. But of course, I'm in real estate. So I want to make sure that my son is taking advantage of things like the VA loans as soon as he
Yeah.
absolutely can in the military, because we all know and we love all those kids that started building portfolios and equity at a very young age. And, we look at them now and we're like, oh, I love to hate you, child.
Yeah.
So,
Yeah, no, it's definitely a strategy, right? It's a great retirement strategy, and if you start early and can do that, and I think you're going to be doing a VA, a class on VA, but there's a lot of things too that as a buyer, also then if you end up having to rent it out, there's things you have to keep in mind with the VA. But I always tell the real estate community, do not shy away from VA offers or loans because they are such a great tool for our veterans that they can leverage. And it's a great loan. It's a great
yes.
loan.
It is. And I
Yeah.
love, and like I said, I know just personal experience. And, every time you say it, I perk up because I want to learn everything I can.
Yeah.
Because within the next 2 years, I'm hoping that, I'll be able to put this knowledge to use. And I love that you bring it up too. And you've mentioned multiple times about Maricopa County being, I think what you said, the number two place for veterans to
Yeah.
retire. So if you haven't come across an amazing veteran that you can help, hopefully you will,
Right.
because they're here and there's no better way to show our appreciation than making sure that our veterans are really taken care of. So that was really that's my little golden nugget for today, was the fact that debt to income ratio is not necessarily looked at when it comes to a VA loan. So that's awesome. All right, guys, if you have any questions for Stacy, she put her contact information in the chat. Please reach out to her. Not just for debt to income ratio questions, but Stacy really, she has such a large base of knowledge when it comes to, anything within the lending industry and within our real estate industry. She is a powerhouse here in Maricopa County, and just she has a lot of knowledge, so please reach out to her because she's awesome. We're going to be having some other great speakers this month and great topics. Next week we're going to cover credit scores and loan, how credit impacts credit approvals and rates. We talked a little bit today about some of that, don't take out new credit cards, and we're going to get into the numbers and specifics of that. Then we're going to talk about pre-qualifications. Yes, if you can make sure that you get those pre-quals in before you even start dealing with buyers, it's really where you need to be, especially with all the changes that have gone over the last year or so in our market. So getting yourself prepared to help your clients get prepared, what buyers need to know. And then at the very end of the month, we're going to be breaking apart all of these different loans. FHA, VA, USDA. These are, you may or may not have known about these. I personally, my first home was a USDA loan, which at the time that I got it, I had no idea what that was or what that meant. It ended up as a young 20-something-year-old being a great opportunity for me to buy my first home, build equity, and then I was able to turn around and buy something a lot nicer here in Arizona. So we're going to be talking about all of those things this month. Of course, you guys know, if you cannot attend live, I love to have you guys on live, but if you cannot attend live, these will all be recorded and available on our Landmark Title Assurance Agency YouTube channel. All right, we've got a couple other great classes coming up, great classes / events. Tomorrow we have the Let's Tackle Real Estate. This is going to be an event where they're going to cover the essential aspects of home buying. Once again, we're talking all about home buying the month of February here on Marketing Matters. And if you want to come to an in-person event where we're going to have pizza and food and door prizes and giveaways like a catered Super Bowl party, if that's more your jam, then you gotta definitely register for this. It is tomorrow and there's 2 time slots, so definitely get in and register for that today. You can scan that QR code or reach out to Patty or Michael to get registered for this event. And then on February 11th, we've got a couple of great classes in the Scottsdale area. So one is going to be a realtor lunch and learn. Once again, we're going to be covering home buying. I'm telling you guys, this is a hot topic because it's happening finally after a couple of years of waiting. We're going to be covering the basics of all of that. This is going to be on Scottsdale Road from 11 until 12:30. Lunch is going to be provided. If you want to register for this, it's limited seating to 20 people too. So reach out to Patty and get registered for that. And if you need your CE credits, we have a class in Scottsdale going on. This is the 3 credits. This is your deed fraud, your Firewise, and your AZ water credit. These are the 1-hour credits that end up, you get 3 hours for attending this as well, but you need all 3 of these 1-hour credits to renew your license. So we are offering these classes now in person. They're really kind of cool because it's like broken up, like 1 hour is deed fraud, 1 hour Firewise, 1 is AZ water. So it switches it up a lot. This is 11:30 until 2:30 next Tuesday on the 11th as well. Reach out to Dina if you want to register for that. There's going to be lunch for that too. So it's way better than like an online CE, right? And then on Wednesday, February 12th, the next day, we've got our wonderful class with Patrick McQueen. This is a webinar that we do every month. he is going to be talking about 2024 real estate law, a year in review. So he's going to be talking about there were a lot of changes in 2024. And I know you guys aren't tired about hearing about all of these changes. How could you ever? Because they impact us so much. So there's a couple that you may have not even been talking about, like the 5 new HOA laws that, well, it says everyone is talking about, but maybe you're not talking about it. But if you attend this webinar, you're going to get the knowledge and you're going to be well informed. February 12th at 11 a.m. Scan that QR code or reach out to Renee to register. And then, of course, we have our wonderful home tours every single month. Moon Valley, third Thursdays at 8:30. Biltmore Luxury, fourth Wednesdays at 9 a.m. They are always free and super fun. And if you ever want to find out what other classes we are offering here at Landmark Title, don't forget you can go to our events page on our website, ltaag.com/events. I update that a couple of times a week. So I'm going to get off of here and I got some new flyers just this morning that I'm going to get in there and I'm going to update for you all. So get in there, take your classes, get your information. I'm thinking it's going to be a great year. It is the wood snake. It is, that's the Chinese New Year, which is the snake is out there and the snake is getting stuff done. So if you need any partners to help you get stuff done, working with those home buyers, home sellers, getting those marketing materials all together, please reach out to your business development managers, Beth, Dina, Keith, Mary, Michael, Patty, Renee, Raylan in Prescott. We are all here to help you, not just with your marketing, but of course, all of your escrows. So please think of us on the next contract as well. We have 7 offices across the valley, 1 in Prescott, 2 in Nevada, to help with all of your title and escrow needs. So please, please, as you are getting busy here in 2025, bring us with you. We offer a great level of customer service and your clients will be asking time and time again to work with Landmark Title and our amazing escrow teams. That's it for us today, guys. Full month of home buyer information coming up. If you miss any, of course, check them out on our Landmark Title Insurance Agency YouTube channel. And I'll see you all next week. Thank you to Stacy. Always great to have you on.
Thank you. Have a nice day.